Welcome to the Hog Market Talk Podcast, your weekly deep dive into hog market fundamentals, breaking news, and industry insights. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is August 5th. I've got Lucas Wells with us here today. We're going to do a hog podcast. How's it going, Luke?
It's going, Mike. How are you doing?
Fantastic.
You can tell us a little bit about this crop tour we got going on?
Yeah, just a short bit here. It's been a really fun week. We had StoneX yields come out this week as well, so it's always fun to compare our numbers to their numbers live. So I'm going to have Cade pull up StoneX yields there. They came out at over a 184, and just comparing some of their numbers to ours, the Nebraska, South Dakota, North Dakota numbers, a little on the high side, I thought. We could pull those down a little bit. Iowa, obviously, a very big yield, well above record, very doable. Minnesota, same case scenario there as well. The more that I am learning about this year's crop tour, I didn't have a ton of bias going into it. I knew the Western Corn Belt's probably pretty tough. I knew Illinois was going to have some holes in it out east, which we did find. Everyone else, okay. When I start using, I'll have Cade go to our website. We have a tool on there. It's a U.S. corn yield calculator. You can type in every state's yield, and it'll give you a calculation for the U.S. on what yield we'll come up with for the United States. It is very difficult for me to get below a 182 yield. Even if I destroy the numbers in the Dakotas and Nebraska, it's very difficult for me to print a number with a 181 on it. So I'm going to leave that out there for you guys. Please play around with those numbers. Please use it. Plug in your own calculations, because it more than what I was anticipating, that it's very difficult to get below a 182 with what we know so far in this crop year. So very interesting. The U.S. has a 183 trendline yield plugged in. We'll have a WASDE report a week from today where NAS is going to take their first stab at it. I would think if I had to take an early guess here, you're not going to be able to hold me to it, even though we're being recorded. I think they'll come out with a 185 or higher in that report, just based on the way they calculate the report. Sure. So kind of market's been going down. Maybe they're anticipating that a little bit. On the grain side, though, I mean, you've had all four playing apart here lately on the big four. Weather, two wars, and China. China buying's been active, been good. The basis is reflecting that in the Western Corn Belt on new crop soybeans, for example. Both wars have been meh. We had some ceasefires, then they kind of came back, but crude oil's still kind of going down. Diesel's going down. You're seeing a little action with sulfur and some of the logistics around fertilizer trade. If you have questions on that, give me a call. It's some interesting stuff there due to the Strait of Hormuz. Sulfur's up like 300% from what it was, so that's a big one. And then obviously weather, just being the big one. It's a little bit wet, a little bit cooler temps into the month of August here to start off with. So that's kind of how inputs are sitting. Luke, you want to give us a little bit of a breakdown on what you're following in the hog market?
Yeah, for sure. And I don't know. I'm kind of framing the hog market up, the good, the bad, and the ugly. As we kind of roll through some things, and the good. If we show a slaughter chart, okay, we've this mythical unicorn, this alleged production hole, supply hole that we've been looking for all year. The market's been looking for all year. We would have to argue it is showing up. So I think Cade's got the slaughter chart pulled up here, and we got 3 weeks below a year ago production, Mike, and significantly so. There has been a lot of maintenance. There's been a lot of breakdowns, production facilities, right? But they always have the discretion or the option to add back in a Saturday. We don't need Saturdays now, and they haven't, because hog supply is tight, right? So that part is good. I would evidence this. We're in a bit of a hole by weights, and I don't know if I had a weight chart pulled up, Cade. That's fine. I can describe it. But weights are dropping. So the reduction we've had the last couple of weeks, it's kind of like emulated a holiday, like Memorial Day or 4th of July. And you will see weights jump when we don't harvest. We miss a day's harvest, right? And weights, we've missed enough. Weights should have popped if we were, it's up. And we got a little pop going on here that came in, but not a major pop. Weights are kind of coming down. So that's the good. I think we're kind of in a little bit of a reduced supply side. But the bad is, this is a demand market. All right. And this has been like the last 7-day period. It's been the week of the hams. Okay. And so, if you take a look at the ham chart, there's kind of, this statement that like sometimes commodities, they kind of take stair steps up and elevators down. The ham, it's just been like a straight down shoot on hams. So much is so that like there's something else going on there.
There's a seasonal to it, but that's extreme this
And
year,
we're
isn't it?
a little bit ahead of the seasonal.
Yep.
And then we had a little bit of time left on the seasonal. We're in a little bit of reduced supply. Like Cam should not have done this. There's a very logical reason why they did. Middle of last week, around the 27th, we had a lot of TNs, temporary visa work permits, expire. And so we lost some labor at the packing industry. And like the day that happened, we started deboning less hams. Okay. Mexico knew it, that was kind of coming on. So they're levering us a little bit. And when you don't debone a ham, it's worth less. And you've really got only one good buyer and that's Mexico. So having that ham to go down, that's a function. There are some demand challenges I'll bring out, but this is we're not processing the hams, and Mexico's levering us a little bit. We will. I don't think this is a 2 or 3 month problem. My perspective, it could be a 2 or 3 week problem because we got to get people re-upped on work permits. You bring in new labor. There's some technical skills to process. You got to train them, right? So it's going to take a little bit of just a time to work back in. But that's really driven that down. It's driven it down, especially when the market saw less pigs. Should have saw product respond, and then we had this ham kind of anomaly come at us, hit us really hard. Brought up a lot of demand concerns, and we do have some demand concerns. If you look at the belly primal, it's doing pretty well. Maybe bellies can offset us a little bit in hams, possibly, but then you look at the loin. The loin's really struggling, and this ham thing. It's an under process. Well, we've seen this before. We've seen it in COVID. Usually, when hams bone, it's a labor issue or hams drop, right? So we got that going on, but at a broader level, and we talked about this all year in this protein environment, like chicken's going to come after us. And they have, so there's an inflation chart that I think you can bring up. And we know we've got a consumer, especially a middle-class consumer, K-shaped economy, whatever you want to call it. There's still some inflationary pressures going on there, largely by energy, largely by gasoline. So we still have a consumer that's got a little bit tighter situation. And then you look at pork, it's been relatively flat, but look at chicken. That's what I want to bring on. Chicken price, I think it's like 34% lower year over year, and supply is up about 3%. Right. So we have more chicken coming at the consumer at less price. And I think you see that manifested in the loin. And even though we've got this ham deboning issue, nothing on pork demand's outstanding, right? So we got that kind of coming at us, and it's hit us. So it's cascaded in some demand concerns, and we've had a pretty steep sell-off, obviously, in the forward curve. Also, taking a step in and out, just the global picture. China, they're oversupplied in pork. They're in liquidation mode, right? Their producers underwater. They're not importing as much meat. The countries that are major import buyers, like a Brazil, like a European Union, like a Spain, for example, they've also responded. They have more production, okay? And so like their producers are underwater. Their economics are negative, and they can't sell as much to China because they're not as big an impact in the global market. So you've got those countries. They're also, and Canada's in the list too, right? But they're coming after our customers. So, I think in the near term, this ham thing has really hurt us, right? But I think as you just move the perspective out into 2027 and further, we got a little more competitive pressures. We got a little more global pork coming at us. We still have a consumer that's got some questions. We're still getting outmaneuvered by chicken, and all that. So my case in point, I think our U.S. herd's relatively stable, right? In inventory, we had a really bad year in health in the U.S. We offset some of that in domestic production, i.e. making them bigger. Corn was cheap. We took our carcass weights up. Canada, their production's good. They've had supply. Canadian hogs have been coming down. Globally, we've got a little bit more pork. And, so the only thing I bring that up is just as we kind of set our plans, and we've been actively hedging in 27. We've been actively hedging in summer of 27. It's just, the expectations, we're just a little tougher operating environment, I'd say year over year. And we need to reset just a little bit. Maybe if a person was looking for a little above targets, maybe you move more at targets, you move some floors, just kind of watch that here. Do think we can gain some value back in this October, December. Do think we got a little extreme, maybe discounts from today's futures values up front, especially through February, right? So
especially if we keep comparing this year to 24, because Q4 was actually pretty good in 24.
It was really good in 24, right? So, I mean, I'm looking for a little stabilization. I don't think just, pork demand went from like okay to like super bad. I think we regain some things, add some value back to our hams. Still exports. I mean, we still have a spot there, right? So I'm not all doom and gloom. I'm saying it's unfortunate, the good, the bad, and the ugly. Good, it looks like we're in a little supply hole. The ugly is demand is the bigger driver. We had a big hiccup on hams. It dinged us, it hurt us. And then looking forward, just it's a little tougher environment. I'm not saying it's a disaster. I mean, our margins are still positive, in the 12 and 15 month strips, right? But just, sell rallies, use this volatility when the futures gets up, gives you some targets. Defend your revenue. You spoke on corn a little bit, and we'll see where yield comes in. That 460 on the Dees, the 315, 320s on the meal. Like those, if we get a little bit of pressure, we get down to 450s, 440s, just, it's the time of year where we're looking at basis positions on corn and meal.
Almost there. Like at 450, it becomes a lot easier. At 300 on meal, it becomes a lot easier. It seems like.
For sure. 310 on meal, it becomes a lot easier. So just, we amped up just a little tougher environment. Again, we can do well in it, but managing your risk, I know it's always been important. It's going to be even more important in 27 and 28 as we kind of filter through this. So, interesting times. We've had a really rough 7 days in the lean hog complex, right? I think we can gain a little bit back from that. I think we still have some things going at us, but again, just the outlook, and we've had a nice run, and typically, the world is going to respond with producing more. We haven't necessarily increased our production domestically, so that's kind of taken this global view. But globally, pork supplies are they've grown, right? And we export 25% of our product. It's a very important piece of our revenue. So kind of cater all that together and just stay laser focused, right?
Very much so. All right. Well, thank you for the breakdown. I like the good, bad, and ugly. Awesome breakdown. Please, everyone watching, please click the subscribe button. Please click the description below. Click the subscribe button. Please watch out for some of the crop tour data coming out. It's going to be imperative that you try to play around with the tools. Send us some of the things that you got going on your operation, your samples, things like that as well. Mind your P's and Q's, and we will see you next week.
Thanks, Mike.